Welcome everyone to Real Estate with Gwen Price, and this is our monthly market update. And I'm happy to have with me again, of course, Trina Tallon, a mortgage agent with Neighbourhood Dominion Lending. Hey, Trina.
Good morning, Gwen. How's it going?
Oh,
Happy
pretty
February.
Good. Happy February, yeah. Doing anything special for Valentine's?
We do special things every day.
Oh,
how's that?
Oh, you're still in love. Oh, that's great. No, yeah, it's well, and every week now I've been posting how many weeks left till spring, as if by magic, the snow's going to disappear, but it's not. We're still going to have it, but I psychologically, I feel better to know it's spring.
I agree.
It'll be interesting to see what our market's like come springtime, because as you know, it's still pretty crazy. I was just telling you, the average sale price is up about 31% since last January, and we're running close to 450 as the average sale price. And then just since December, I knew there was, you could see some of the offers, the prices were just rising, and that it's been up about 12% since the end of December. And there's like I look at this little chart here. This is us. This was 2017, and here we are in 2022 so far. So since 2017, it's gone up about 62%. And we've been talking to everybody for the last 2-3 years. My buyers are saying, I'm going to wait till the market crashes, the prices come down. That's not, it's going to stabilize. We just haven't seen that stable point yet.
I agree with you. There's like everything that's going on in our world right now, there seems to be a lot of theories about a lot of different aspects of what's going on in the housing market, what's going on in the healthcare world, what's going on with government, all this kind of fun stuff.
Yeah,
I try and focus just on our housing market and things like that. I'm hoping it stabilizes for folks out there. A lot of people think that an increase in the interest rates will take care of this housing shortage, but the rates really have nothing to do with the housing shortage. We have an actual housing shortage, period. And supply and demand isn't just about listings, it's actually about physical buildings being on properties. Things seem to be, I think, stabilizing in the lumber market. I'm like a little bit better. So CMHC is thinking that new builds are going to go up considerably this year, which is great. Yeah. It'll be awesome. It was very difficult for a builder at this point in time to plan for these builds because they have no idea what materials are going to cost. And the second component to that is it's very difficult to get trades.
Well, and I've just experienced it in the last few weeks. Actually, 2 of my clients looking for new construction, and you basically can't get any prices for anything to be built unless it's physically standing in front of you, that they've already framed it and closed it and all of that thing. They won't give prices. And I can understand their hesitation because it's very fluid. The prices of lumber, they're unsure, and absolutely the skilled tradespeople, they're running into all of those, and everybody's kind of trying to still play catch up from all the ones that they couldn't do last year. And it's a tricky situation, but that's what we need is some more inventory, and one way to get it is new construction. But they, of course, all of those rising costs get passed on to the consumer too.
Exactly. Like lot prices are higher.
Yeah.
I feel like we're kind of getting over this Omicron thing. I'm hearing less and less about people in my, distance circle having COVID.
Yeah.
And
yeah.
So because that caused a real problem too with, everything, not just, trades, but employees being sick or not wanting to go to work because of not wanting to get sick, and kids not going to school and all that kind of stuff. So we're really it's everything that's affecting this housing market, where it's going to be a wait and see.
Yeah.
you
Well,
know,
and a lot of that too, even, you know, a senior, they're reluctant to have a whole bunch of people in their house with the, you know, the virus going on. And so I think a lot of them, maybe as things improve in the next few weeks, a month, that maybe they might be open to putting their house on. But anybody who's got a house that wants to buy something, they're faced with the same situation as all the other buyers, that there's lack of inventory. So if I'll sell my house, no problem, but where am I going? Yeah. So
yeah,
it's,
so that's definitely a concern for sure. About interest rates, because
Yeah.
the media tends to overinflate what's going on out there, and a lot of, you know, it's a lot of people making speculations as to what's going to happen. So just to give a bit of a perspective to folks out there, when I purchased my home in the fall of 2018, we did a huge down payment. And for me, the best rate that I had at that time was 3.39% on a 5-year fixed. And that
Yeah.
was just a couple of years ago. And that was
Right.
pretty much, you know, the norm was the high 2s to mid 3s kind of thing.
Yeah.
And we got very, very spoiled over the last couple of years with our fixed rates being extremely low.
Mhm.
So the push to purchase to get such a low rate, I'm still calling it free money, because, you know, what's 3.5%, or, you know,
Yeah.
you still have some lenders out there that are doing 2.89 and things like that, but fixed rates are on the rise. But what's interesting is that this time of year, fixed rates are always on the rise.
Mhm.
And then they go a little bit down in the summertime and they come up, and
Yeah.
variable is still extremely low. Even when I do examples for clients showing them, okay, let's look at the next 2 years. If the Bank of Canada does 2 increases or 6 increases, let's see what the difference is in the interest that you're going to pay. And, you know, they come out on top every time. The other
Mm.
thing too is the amount of interest that they're saving up front. But the biggest, again, I'll say this again, is penalty. What
Right.
happens if you need to get out in that 5-year term? How much is it going to cost you?
Yeah.
And so it's interesting to have these conversations with folks about rate. It's not all about rate, it's about a whole bunch of other things as
Yeah.
well, right? And that's why the
Mhm.
client conversation needs to happen. Credit has become a big problem out there right now. A lot of people don't realize that if they max out their credit cards and their lines of credit and carry big balances on these things, it decreases their credit scores as much as missing payments.
Right.
So I've actually had a number of clients that in the last 2 years, who I did mortgages for prior to, you know, COVID hitting Canada, and they were in great shape. You know, they had awesome credit, they had great
Yeah.
jobs, everything was wonderful. And then they got themselves into a bit of financial problems with credit cards and lines of credit over the last 2 years, and are coming to me as a last resort to refinance to pull out equity. Part of
Yeah.
the problem though is that when your credit score drops so low, those AAA lenders out there, they don't want to touch you. It's all about
Mhm.
credit.
Yeah.
So then we end up in the alternative world. So it's best to, you know, if you bought within the last 2 years or previous, you have equity.
Mhm.
With
Mhm.
the increase in housing prices out there right
Yes.
now,
Yeah.
and if you're
Absolutely.
in trouble financially, reach out and talk to someone or
Yeah.
call me about refinancing to get yourself out of trouble before you get too far down the rabbit hole and go and take out loans for like 30% interest and things like that, because that's
Yeah.
not helping you either.
No, and for sure, and of course we keep telling people too, if you're going to be buying a house, do not be buying all those other things first. Wait till you get the house. And yeah, I mean, credit rating, they look at a lot. They look at your cell phone bill is on your credit bureau now too. And of course, it's to show, you know, that yes, I can pay my cell phone bill every month, and along with all my other things. So I mean, the banks are, they don't like risk, and the more risk, the less you're going to get from them. But I know people are really, that's all we hear about is interest rates going up, going up, going up, but they're not going to go up to 6% overnight. They're not going to go up. Nobody even knows about double digits. That we keep saying that too, about whole generation doesn't know double digit interest rates. So we've had cheap money for a long time right now. But
Absolutely.
yes, it can be a hiccup for some people, but yeah, it's not going to, I don't think it's going to change our state of things here. The way a lack of inventory is the biggest problem. People are wanting to buy a house. They're approved to buy a house. It's just frustrating as heck. Like I was telling you before we started, seems to be that 300 range, and there's been a few of them that are 399 selling over 500,000. So, if you were approved for only 400,000, you're not going to get that house that was listed at 400 or ish kind of thing. So it's a frustrating market. Realtors don't like it. I mean, the sellers are happy unless they're also trying to buy something. So it's a challenging market, but there is opportunities. It is just, you can't just decide today I'm going to buy a house and have it by tomorrow. That's probably not going to happen. You're going to have to do, go out like everybody else, look at houses, see what's out there, and try to get something, because I still believe in home ownership if you can all get into it, because over time houses appreciate.
100%. One of the things that I do with my clients I get pre-approvals for is I have them send me a listing before they write an offer, and to let me know how much they're planning on offering, and also for me to take a look at the listing, because I'm also noticing that there's a lot of inventory coming on the system that have a little bit more challenges than when we had all kinds of listings out there, right? So I like to take a look. I like to make sure, because the other thing too is that if the client is looking at buying something that's 270, but they're pre-approved for 400, and they go and they buy it for 400, but they only have 5% down, I have a pretty good gauge as to whether or not that property is going to appraise for that value, just based on like keeping an eye on what sales look like and things like that, because you need a plan. If you're going in and that property doesn't appraise properly, like at the value that you've purchased it for, where's the extra money going to come from?
Exactly.
So I make sure if you're out there writing unconditional offers, that whoever you're dealing with from a bank perspective, that they actually take a look at that listing and make sure that you're okay going in.
Well, and that's why you need to deal with somebody like you, a mortgage specialist, right? Not just you've gone online, plunked in your numbers. Oh yeah, okay, I'm approved for 400. But there's a lot involved in that, and not only just producing all the documentation the banks want nowadays, but you're absolutely right, looking at that listing and saying, okay, yeah, you should be okay with this. But if that place you just paid 400 needs a whole pile of work, what are you going to do? So yeah, it's not a straight cut. There, you can't just absolute say yes. There's a lot of little things that have to be taken into consideration, and that's why you need skilled professionals. So but yeah, I don't see things changing too much. I think we're going to still be seeing price increases. How high it might start to settle down somewhat, but that's going to take more inventory coming up, and it's challenging, but there's opportunities for people. So
absolutely.
Yeah.
Now I wish we had more condos in Sudbury. Those would be pretty economical for folks.
Well, and you know what? There is that whole demographic of the baby boom generation wanting to downsize, and okay, what will make their life easier? And a lot of times condo is the answer, right? And especially if they're fortunate enough to be able to spend the winters somewhere, they can just shut the door and go. But yeah, for a long time, Sudbury, for about 20 some years, there was no new condo developments. Now there's a few more, but we're not like a lot of places where there's a condo for everywhere and any type of condo. So they're limited here, but it definitely has its purpose and its place for a lot of people. So Yeah. Well,
That's
thank you
right.
very much, Trina. It's always interesting to hear what's going on in banking because I can't keep up, and that's why I send my clients to, to a mortgage specialist because they keep changing things. They keep changing the rules, the rates, and it's a lot more complicated than it used to be years ago. So they need a skilled professional like you to guide them through.
Thanks, Gwen. And I appreciate the market updates so that I know what's actually going on out there and can keep
Yeah.
on top of it, right? To help, encourage clients to go out and buy now.
Yeah.
And this is what
Well,
you're going to be looking at.
sometimes it sounds like a broken record every month, but as we've seen just since we've been doing these market updates, the prices have gone up quite a bit. So
Yes,
it changes reality for a lot of people. And I hope
absolutely.
they do get more affordable housing up and for people because it's getting pretty tough for people to find a reasonable apartment even to live in. So
For sure.
I hope they got some plans on the books. So thanks a
Yes.
lot, Trina. And
Thanks, Gwen.
we'll talk
Have a
to you
great
next
month.
month. Yeah, you too. And happy
Take care.
Valentine's Day.
Yes, happy Valentine's Day. Take care. Bye now.
Okay, bye.